than just business news, we're news for business people.
Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil. First, the headlines. Indian markets streak off some of the early morning jitters, but continue to trade in the red. And positions unwind in PC Jewelers as stock advances, but Just Dial, Union Bank of India and Bata India futures see further accumulation of open interest towards the short side. And 50 individual stock futures start trading on the Singapore Stock Exchange from today. It's a two-way race for Bhushan Steel, as Tata Steel and JSW Steel-led consortium are the only bidders to submit their final bids. And Bosch and Tata Motors are the two nifty companies coming out with their third quarter earnings today.
Okay, let's take a look at what's happening in the markets. It's a weak start to this new week, but remember, we've seen a good rebound, at least from the opening levels that we're seeing today. Nifty is up almost 70 to 80 points from those lower levels, and the Bank Nifty too seems to have recovered almost 180 to 200 points. But still, as we speak, Nifty is trading with cuts of 75 points. It's inched higher above the mark of 10,650. Remember, the opening today was below the mark of 10,600. So clearly, the bulls have protected the 50-day moving average in trade today. The futures are trading with a premium of almost 6 points vis-a-vis the discount which was seen on Friday's session. Let's just pull up the Bank Nifty futures as well and see what's happening there. Premium of 93 points, so that premium seems to have gone up compared to Friday's premium. And if you look at the level right now, there seems to be a sharp recovery. Bank Nifty from the opening levels have recovered almost closer to 180 or 200 points, but still trading with cuts of 314 points. But volatility continues to be on the higher side. Remember, on Friday, the India VIX inched higher by 8%, and today it's trading above the mark of 16. In fact, at one point of day today, it was up almost 7 to 8%. Currently, the India VIX is trading with gains of 5%. The call writing in the system continues in today's trading session as well. So if you look at strikes like 10,600 call, that's added nearly 5 lakh shares. You've also got the 10,700 call strike with just about 45 minutes to 1 hour into trade, and almost 10 lakh shares have been added for the 10,700 strike. On the put side, some bit of protection is coming around the mark of 10,500. Remember, that's a good support level as well, as maximum OI concentration on the put side is on the 10,500. Not only that, we've seen some put writing coming into the system around the 10,600 level as well, which has added around 7 lakh shares in today's trade. So what levels to watch out on the downside will be the 50-day moving average for both Nifty as well as Bank Nifty. We'll just pull up the levels there for you. The 50-day moving average for Nifty is somewhere about 10,586, 545, pardon me, and for Bank Nifty it is about 25,878 Agam.
Well, let's pull up a list of all the stocks which are looking at an increase in open interest. You know, what you'll notice is that there isn't as much in terms of increase, despite the fact that the benchmarks are looking at some substantial weakness. So let's start off with Just Dial. Well, it's looking at shorts, but United Breweries, on the other hand, is looking at fresh longs building in. In fact, that's up as much as 9% in terms of open interest, underlying also gaining as much as 6.5%. Other than that, we're looking at Cummins India, which is down 2%, OI up 9%. So surprisingly, despite the fact that we are looking at a lot of weakness in the broader markets, 2 out of the 5 stocks which are looking at the most amount of accumulation are actually gaining and looking at fresh longs there. So we do also have Gen Irrigation, which is showing some weakness in today's day of trade. Now let's take a look at some of the stocks which are looking at unwinding. And once again, HDL stands out there, about 4% decline, so some shorts covering there. And well, India Cement, Vedanta, Syndicate Bank and Mahanagar Gas looking at some amount of movement, not too much to speak for. But I will want to talk about PC Jeweler, because if we can pull PC Jeweler up as well, what you'll see is that we're looking at quite a bit of recovery. Early in the morning, of course, we saw a lot of shorts unwind, and now we're looking at some longs building up into the system, even as the underlying moves up by as much as 18%. So an interesting move there, Navneet. But on the whole, of course, we'll be watching out for the broader markets.
Well, that's right. It looks like there's been some buying which is coming into PC Jewelers at lower levels, because the opening today definitely was just about muted. Well, a development today on Singapore Exchange, that is SGX, Nifty 50 single stock futures have been launched. So the Nifty constituents futures trading can take place on Singapore Exchange now. Remember, until now, you could only trade Nifty there, not any single stock futures. So what does this mean for our markets? So far, we've not seen any volume picking up, but it definitely means over a period of time, you could see some OI shifting from the National Stock Exchange to Singapore Stock Exchange, and this definitely gives some benefits to FIs. Let me just bring out those benefits for you. Low transaction cost. If you compare the transaction cost here and in Singapore, definitely it is lower there. And also compliance issues are something to talk about when you look at the FI investment into the India. So that will augur well for them as well. And trading hours and timings, Singapore Exchange opens around 6:30 Indian time, so that gives an edge over the Indian time when the exchange is actually open. And also, if you look at the foreign institutional investors, Agam, who do not wish to register in India and they just want to trade, and they were until now doing it through the participatory note route. And after the clampdown of SEBI on that as well, I remember last year in June, they said the foreign institutional investors can only hedge their cash portfolios into the derivative space, which meant that they could not take any naked positions into the futures and options market. So now they can actually do that, at least for the single stock futures of the Nifty 50 stocks. However, some concerns will be there. As I highlighted, it's day one there, so volume will be an issue and liquidity can be the other issue. Remember, the trades, the buy and sell will be between two FIs, so the view also remains the same. So that can be one concern going ahead. So that's about the SGX single stock futures listing. We'll see how that pans out over a period of time. It's time for us to get our guest in the show. But before we do that, here's a reminder. If you have any queries in the futures and options market, you can call us now on 022-4540-4141. You can also write to us on our social media platforms, Twitter, Facebook, with AskBQ hashtag. Well, let's welcome our F&O experts then. Bhavin Mehta of Dolat Capital and Sameet Chavan of Angel Broking joins us on the show. Good morning to both of you, gentlemen, and appreciate you joining us today on Bloomberg Quinn. Bhavin, let me come to you first. There's been a sharp recovery from the opening levels. Nifty's recovered almost 70 to 80 points. Does it now change the template? Can one look to go long at lower levels, or you should still stay away?
I believe that overall positioning on the index continues to remain the range bound kind of a trade going forward. 10,500 strike continues to have a significant amount of open interest even at this particular point of time. So I believe that it's going to be definitely a kind of a range trade for the market, with 10,800 as the crucial resistance. At the same time, 10,500 on the downside, unless it is not broken. The support for 10,500 continues to remain very strong. So probably going to be a ranged action over next couple of weeks for the markets.
All right, Sameet, good morning. Do you also think that the markets could possibly consolidate at these levels, or further downside, or with the outside chance as of now an upside too?
Morning. We don't expect the market to consolidate. They have entered a corrective phase right now, and 11,000 was a crucial support according to us, and below that, the short-term trend got changed. So in our sense, looking at the weekly chart also, the bearish engulfing pattern has been formed on weekly chart around its important resistance level of 11,100. So that's a bearish sign according to us. Immediately we expect 10,500, and in next probably few weeks we won't be surprised to see Nifty sliding toward 10,200 also. Yes, index has bounced back a bit because it was slightly oversold on hourly chart, but it would be a good selling opportunity according to us. Now 10,750 would act as a very strong resistance, so one can go short at current level, use this bounce back to go short on the index, keep a stop loss somewhere around 10,750. Initial target would be around 10,500.
Okay, so Sameet is suggesting that use any sort of recovery in the markets to short at higher levels because the view, according to him, is that there could be more sell-off which could come about. Okay, then let's shift our focus to the options corner and tell you what sort of option strategies that our experts are deploying today. Bhavin Mehta has a bull call spread on Nifty, but before we take a look at his strategy, let's see what that exactly means. A bull call spread is employed when one expects a moderate up move in a security. Well, in this strategy, a call option of a certain strike is purchased and a call option of a higher strike is simultaneously sold. Bhavin, over to you. Take us through your Nifty bull call spread for the day.
Okay, so our strategy on index at this point of time will be to go moderately long. So given a bull call spread, we are recommending buying Nifty 10,700 call, which is quoting somewhere around 114, 115 levels right now. And at the same time sell Nifty 10,900 call and hedge part of a premium, which will cost somewhere around 44 rupees. Stop loss on this particular strategy will be about rupees 30. At the same time, we expect the maximum profit that can be made out of this strategy is close to about 130. However, one can book once Nifty moves closer to level of 10,750 to 800 on the upside from current level.
All right, well, that's Bhavin's strategy that he intends to employ. Well, Sameet, how about you? How would you, based on the view that you are quite bearish on the benchmark indices, would you use options or futures for that matter right now?
No, as I've just suggested, one can go short at current level. We would rather go short in futures because due to this early bounce back, now risk to reward ratio is quite favorable. So I was suggesting going sell somewhere around 10,670, 10,680, and Nifty was trading somewhere around that. And from there, in last couple of minutes, we have already seen Nifty slipping nearly 20-22 points. So we would maintain our cautious stance, negative stance on the market, and we expect 10,500 to reach in probably next 2 to 3 days.
Sameet, in the near term, if say someone were to buy the 10,600 put or the 10,500 put, would they run the risk of losing out value in terms of time decay, or do you think that at least over the next five or six sessions that could still be employed?
Yes, as I said, that probably next 2 to 3 days we are expecting Nifty to slide toward 10,500. So I don't think so there's much risk involved in getting into 10,500 or 10,600 put at current level.
Okay.
Okay, so those are the option strategies from our experts. Let's also take a look at some of the buzzing stock futures of the day. I want to pull up Century Textiles. That counter has seen a cut off almost 5 to 6%. I also want to remind our viewers, this is a counter where a lot of the open interest is held with few clients. If you look at the current data, almost 94% of the total OI is held with 15 clients. And today is the day when there is a lot of unwinding which is being seen for Century Textiles. The counter is down over 7%. Bhavin, if I may come to you, Century Textiles on the charts, would you initiate any sort of position at these levels?
Century Textile continues to hold very high OI. Also, it is concentrated OI that is being held. So I would like to wait for a timing. Would not like to jump immediately into the counter. The stock has multiple support level at lower level, close to about 1150, 1160 kind of a range. However, that continues to remain much lower from current level. So definitely will like to wait in this particular counter unless the momentum does not settle for timing.
All right, so that's the view on Century. Now, of course, I do want to address what's happening with PC Jeweler because we're looking at a little bit of a reversal from what we saw last Friday. We saw tremendous weakness in PC Jeweler, which was down as much as 25% at the end of the day. And today, it's advanced by as much as 17%, and its open interest has also increased by as much as 7.4%. You know, we were just pulling out a chart right now, which had, in terms of concentration of the number of clients that had positions in one single stock, and PC Jeweler was among them. So as you can see out there, 11 clients out there have a considerable amount of holding in terms of open interest with respect to your market-wide position limits. That stands at around 70%, and as a percentage of the total open interest, that stands at around 66%. So there is concentration of open interest among a very few handful of number of clients out there. That said, PC Jeweler is looking at a little bit of a recovery today. We've seen shorts unwind earlier in the session, and now we're looking at some longs building up. Sameet, that said, what is your view on PC Jeweler? Longs, shorts, or avoid for now?
Honestly speaking, I'll avoid such kind of counters. If you are in the right direction, yes, it would be certainly a good thing, but I don't want to get into such kind of stocks.
Well, it makes sense, Sameet, to not enter into stocks like PC Jewelers, at least for now, because the kind of volatility that one has seen over the past 2 to 3 trading sessions for PC Jewelers, it's best to avoid such stocks. But it's time for us to address some viewer queries. And our first query for the day comes from Ashish Yadav, who's bought Nifty 11,000 straddle at 274. Ashish wants to know what he should do. Bhavin, I'll come to you. What would you advise Ashish to do? He's bought the 11,000 straddle of Nifty.
He can continue to hold the same straddle. Market continues to remain in the momentum phase right now, so probably we may see a good amount of momentum. The VIX as well as IV pointing to the same. We have seen good amount of uptick on the India VIX over last couple of trading session. Also, the IV continues to remain on the higher side, so makes sense as long as both of these parameters continues to remain at the higher end of the zone. I think one can continue to hold the straddle or the strangle position they may have on the indices.
All right, we'll move on, take some queries from social media, and the first one is from Ramani Chavan, and she writes to us on Twitter, and she's short on the Hindalco February futures at around 250 rupees. She wants to know if she should book profits right now. So let's take a look at where Hindalco futures are currently trading at. It's currently trading at 245. So, well, she's making a profit of just as much as 5 points for now. That said, Sameet, I'll take this query to you. Should she hold on, or do you think there's a possibility of Hindalco moving down further, or should she just book and get out of her position right now?
See, if she's a positional trader, then certainly hold on. Since last couple of weeks, we have been quite cautious on the entire metal space, and within this, Tata Steel and Steel Authority, these were our preferred bets on the short side. So both these stocks have already corrected. Along with that, Hindalco has also corrected more than 10% in the last couple of weeks. On Friday, the stock has managed to give a decisive breakdown below its important support level of 250 on a closing basis. Yes, today we are seeing some kind of breather in this particular counter. But if she's a positional trader, she should hold on to it. 250 to 253 seems to be a very strong resistance. So if she is willing to take this risk, then she can keep a stop loss somewhere in that. And we expect this stock sliding toward 234, 232.
Okay, so hold on to your short position in Hindalco is what the suggestion is coming by. Let's take some more queries. Akhil writes to us on YouTube. He's holding Nifty 10,700 call strike, which he purchased at a premium of 150 rupees. He wants to know what he should do. Can we check what the current premium is? I think there has been a huge recovery in the intraday session because Nifty has also recovered almost 70 to 80 points. The current premium is almost 112 points. Sameet, what would you suggest? 150 is the level where he entered.
See, I'm using this bounce back to go short on the index, so my suggestion would be to exit this call option. 10,680, 10,700 seems to be a very strong resistance, and we would expect some kind of selling pressure happening once Nifty enters this important resistance zone.
All right, Bhavin, earlier, just last week, in fact, we had some traders out there who had sold the 11,200 and the 300 puts. At this level, we're starting to get queries for those same traders if they could go ahead and sell further around the 11,000 mark. Would that be advisable, or in terms of the risk-reward ratio, would that be, the risk tilting more in compared to the reward?
Okay, you are talking about 11,000 call.
Yes, the 11,000 call.
Okay, selling 11,000 call definitely makes sense. I mean, the risk continues to remain lower. we have seen a good amount of pressure coming in. On last trading session of the week, that's Friday, we have seen good amount of OI built up at 11,000 as well as 11,200 call. So we saw close to about 1.8 to 1.6 million addition on this particular strikes. So I think it makes sense to sell higher strike call. Markets are unlikely to witness any major momentum towards 11,000 in very short term. We can expect some amount of range trade over next couple of trading sessions. So selling that can be definitely, one can probably look into it. The premium received will be much lower as compared to what one could have probably received on Friday. So it was trading close to about 42 rupees. So I think even at current levels makes sense. One can continue to sell.
Okay, that's the view coming in on a couple of your option strikes for the day. But what should be the trading strategies on individual stock futures? Let's get you that from our experts. Sameet, I'll come to you. You've got two short calls for the day, one on Asian Paints and the other on HDFC.
Yes, I would certainly go with the current momentum. Asian Paints looks weak, although it is overall in a consolidation phase. Since last couple of days, 11.25, 11.30 is acting as a very strong support. And today the stock has managed to breach this important support. So we would go short on Asian Paints, stop loss somewhere around 11.40, target at 1090. Our other short call would be on heavyweight HDFC Limited, which certainly looks weak. On Friday we saw some kind of hint of profit booking, and today we are seeing good short built up in this particular counter. So we expect HDFC to slide towards 1810. One can go short on minor bounce back, keep a stop loss somewhere around 1886.
All right, Bhavin, how about you? What are you recommending in today's day of trade for our viewers?
Okay, I have recommended two stock strategy. One is buying DLF. Now stock has witnessed good amount of bounce back in today's trade. Recommendation was to go long around level of 218 with target price of 245, stop loss of 205. Stock continues to trade around level of 223, 224 as of now. So wait for some amount of downtick and one can enter on the long side. On other hand, recommending short on Balrampur Chini, which is trading somewhere in the range of 113 to 114 with target price of 105 and stop loss of 118. So those are the two stock strategy that we recommend to our clients.
Okay, so those are a couple of the trading strategies being recommended by our experts. If I could just squeeze in one more query in this show. And Bhavin, I'll come to you. This seems to be a bit complicated, but our viewer Saloni Remnimbi has written to us on YouTube. She wants some clarification on what sort of impact does the options have on any sort of dividend announcement. So she's asking, what is the impact of dividend announcement on stock options? And that's specifically on IOC. She's saying after IOC's last week board meeting, IOC's in the money call options are trading below their intrinsic value now. She's also asking, will it change that ex-dividend date, which is on 9th February?
IOC, the market straight was expecting a dividend in the range of 10 to 12 rupees before stock has announced a good amount of dividend. It's close to, I believe, 19 rupees 50 paisa. So definitely you will continue to see the futures part continue to trade at a discount. As far as the option is concerned, market has already priced in the kind of momentum that we may see on the cash front. So post stock going ex dividend, prices will correct and we may see good amount of decline on the cash side. At the same time, futures are already trading at the discount. So I think net basis with the current scenario being priced into the option strategy of IOC, not much to be made out. Stock on the cash side may decline sharply post going ex dividend.
Okay, so that's the impact of dividends on stock futures as well as stock options, and it's an important one too for those who do trade on a regular basis. That is the impact of dividend on their respective derivatives. But we've run out of time, so we're going to wrap this show. We want to thank both Sameet as well as Bhavin for joining us and taking us through their views. That said, we will wrap this edition of the F&O Show, but there's lots more lined up, so don't go anywhere and stay tuned into Bloomberg.